Good evening, traders. Welcome to Trading Tuesdays from Phoenix Blue. This is a video that comes out every Tuesday evening. We review what's happened in the markets in the first 2 days of the week, adjust our understanding, our analysis for the remainder of the week, and look ahead to the opportunities that lie tomorrow, Thursday and Friday. However, this week is non-farm payroll week, so opportunities will be limited by the fact that we won't be wanting to open trades into the big news on Friday. Dominating the market at the moment is a return to US dollar strength, and we'll take a look at that straight away. Today we had news out from the States, the ISM manufacturing PMI, which was expected around 48.5 but came in 49.5 and has given us a nice bullish day again on the dollar index here. We're bullish, back to a bullish stance on the dollar above 97.50. The news coming out today and previously over the last week or so has been largely positive. So dollar strength remains or has returned as the dominant factor in the marketplace. We've seen this morning. We've been trading the euro. We took one trade short from this level at 1.106. We got into profit, stops to break even, took profit off the table before breaking and retesting this level at 1.096, where again we've had price move away, stops to break even, more money off the table, and we're currently in this trade at this moment in time. We do seem to have reached a bit of a level here that's a bit of a barrier for price. It may take as long as till Friday and non-farm payroll to potentially break that level. In correlation with that, we're also watching the Swissy, the US dollar CHF. We're looking for a break and retest above parity. That will require the euro to drop quite substantially further. We've had a couple of looks day before. Yesterday we had a really big look up but came down again. We've been above parity today, but price has come back down. It will take that sizable move on the euro, potentially coming about through non-farm on Friday to give us a daily close above parity, at which point we'll be looking for a retest of parity going long. Okay, CAD. This is an interesting one. CAD obviously correlated with crude. We had a trade up at this level that failed a couple of weeks ago. There's a very nice level through here at 133.00. We are looking to trade that level. Technically it's very good, but the downside or the caution we're looking at comes from crude. There appears to be somewhat of a disconnect in the correlation between crude and CAD at the moment. This is the key level, 35 US dollars on crude. If we see a break of 35 US dollars before we get to our price on the CAD trade, we will not trade the CAD trade, because if 35 is broken, we expect to see crude drop quite substantially. It's been pushed long for over a year on the dramatic reduction in oil prices, and we just feel that there's a pent up short in that market with a bit of disconnection from crude. The connection will come back, it always does, but in the short term, if $35 is broken, we will expect to see CAD fall quite substantially. We have been talking about this New Zealand trade, New Zealand US dollar trade this week. We identified these extremely nice levels, and we were looking to try and build a position short in this market by taking low risk trades at each of these levels. We took our first trade here at this level. We got a stop to break even, but then we were stopped out at break even. We've got, at this moment in time, it looks like we'll have a close above this level, so this level will no longer be valid for a trade. We would be waiting for a break below this level and a retest of that. Again, looking at these other levels on the way down, the objective being to have a large risk-free position at these lows here, in the hope or the possibility of a break. Although we have seen this week the Australasian pairs relative strength compared with the dollar when comparing with the European currencies, etc. Okay, over on gold, we're in a triangle at the moment. Our bias on gold is long. There's bad news coming out of the Chinese markets. We see risk off being the strong factor. We're waiting for a break above this triangle, potentially a retest of this level here, or a break above and retest of the high, in order to continue with a trade that we did have, a lovely trade we had here through February, long on gold. But again, as I say, because of the way the issues in China, the news coming out of China, we are very much expecting risk off to be the dominant factor going forward in the medium term. S&P, we had a nice trade on Friday from this level at 1969. We got to our T1 profit level, took money off the table, stops to break even, but the second half of our trade has been closed out this afternoon by price coming back up to break even. The reason being the same reason that we got the dollar strength, was we got positive manufacturing news, and that's driven equities long. Just a review of the cocoa trade we're still in. We appear to have a channel that we're working through here. Again, price relatively volatile through there. We don't have a problem with this. We're still very, very comfortable with this trade. Our target is the highs up here. It's not going to happen quickly, but we're confident that price will come from these based on our commitment of traders signal down here. Okay, guys, so unfortunately not a lot of trading opportunities on this Trading Tuesday. It's more about keeping our analysis up with time, and then looking at what happens on Friday on non-farm, which will give us a direction for the forthcoming weeks. Just a quick look here at how Phoenix Blue might be able to move your trading to the next level, how we actually trade, and our analysis and what have you. You can contact us at info@Phoenix Blue without commitment. We'd be happy to talk to you and see what the possibilities are for hopefully making your trade more profitable. Okay, guys, brief tonight for the reasons discussed. Thank you for listening, and we will speak to you soon. Bye now.